Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about COEUR Mining INC quarterly report. COEUR Mining Inc. offers a diverse range of businesses and services, including gold and silver production exploration for gold, silver, zinc, lead, and other related metals, concentrate marketing and sales to third-party customers, such as plus refiners plus smelters operations in the United States, Canada, and Mexico through various segments, including plus Palmerjo plus Rochester plus Kensington plus Wharf plus Silvertip plus Las Chispas. COEUR Mining Inc.'s stock price has skyrocketed by over 174% in the past year due to a combination of strong financial performance, strategic operational advancements, and favorable market conditions for precious metals. Key drivers include exceptional earnings growth, increased gold and silver production, strategic acquisitions, and favorable precious metal prices. The company's transition to profitability over 5 years and accelerating growth in the last year have contributed significantly to its success. The acquisition of Silvercrest Metals and its Las Chispas mine has been a crucial driver, boosting silver production and playing a key role in the company's turnaround. Additionally, the expansion of the Rochester mine in Nevada is contributing to increased silver production. Favorable precious metal prices, with silver exceeding $42 per ounce, have also benefited mining stocks. COEUR Mining's improved financial health, commitment to environmental, social, and governance (ESG) practices, and disciplined capital allocation have further resonated positively with investors. As a result, the company is projected to achieve a net cash positive position by the end of the year, solidifying its successful strategic turnaround. The primary drivers of revenue growth in this financial summary are primarily attributed to increased metal sales, particularly gold and silver, at various mines. Higher average realized prices for these metals also contributed to the growth. Additionally, higher production volumes at Las Chispas and Wharf mines, as well as post-acquisition sales at Las Chispas, played a significant role. On the other hand, revenue decline is mainly due to lower metal sales at Rochester mine and increased adjusted costs applicable to sales at Palmerjo and Wharf mines. Decreased silver sales at Wharf mine also contributed to the decline. Net income and profit margins. A significant shift. The financial performance of a company has undergone significant changes between 2024 and 2025. Net income has experienced a substantial increase, rising by 16.57% to $370,903 in the first 9 months of 2025, compared to $21,048 in the same period in 2024. This growth is also evident in the third quarter, where net income increased by 448% to $266,824. However, profit margins have shown a mixed trend. The operating profit margin decreased from 13% to 27.1%, while the adjusted net income margin and EBITDA margin saw significant increases of 20.7% and 13.7%, respectively. These changes suggest that the company's revenue growth has outpaced its cost increase, leading to improved profitability. The reasons behind these changes are not explicitly stated in the summary, but it can be inferred that the company has implemented strategies to boost revenue and manage costs effectively, resulting in a significant improvement in net income and profit margins. The company is indeed generating positive operating cash flow. This can be seen in the financial summary, which explicitly states that the company is producing a net positive cash flow from its operations. A closer look at the numbers confirms this trend. For the quarter, the company generated $237.7 million in cash provided by operating activities, page 28. Similarly, for the 3 months ended September 30, 2025, the net cash provided by operating activities was $237,706, page 41. Furthermore, when looking at a longer period, the 9 months ended September 30, 2025, the company's net cash provided by operating activities reached $512,292, page 40 and page 41. These figures demonstrate that the company is consistently producing positive operating cash flow. The company's debt level and interest expenses have undergone significant changes in recent years. In terms of debt level, the total debt has decreased by $241,667 between June 30, 2025 and September 30, 2025. Additionally, over $228 million of total debt was repaid, indicating a substantial reduction in debt. This suggests that the company's efforts to manage its debt have been successful. Regarding interest expenses, there is a decrease of $14.4 million, 36%, due to lower interest paid under the RCF driven by lower average debt levels and interest rate. Furthermore, interest expenses decreased by $1.4 million in 3 months ended September 30, 2025 compared to June 30, 2025, and by $6.8 million in 9 months ended September 30, 2025 compared to September 30, 2024. Overall, the data suggests that the company's debt level has decreased significantly, and interest expenses have also decreased, indicating a positive trend in managing its financial obligations. The company has made several significant acquisitions and divestitures in recent times. Acquisitions include the purchase of Silvercrest for $103.7 million, Las Chispas, and mining concessions at Pamerjo for $10 million. Additionally, the POA 11 expansion project at Rochester was completed in March 2024. On the other hand, the company has divested its acquired bullion and metal inventory for $72 million. It also settled a royalty matter with Mavericks Metals Inc., resulting in a decreased effective rate of royalty. Furthermore, shares of common stock were issued to an affiliate of Mavericks as part of this settlement. Concerns about inventory buildup and supply chain disruption. The financial summary highlights concerns regarding inventory buildup, which could have significant implications on the company's operations. The use of a weighted average cost method for inventory valuation, page 43, may exacerbate these issues. Furthermore, potential inventory buildup is noted if sales do not keep pace with production at Rochester and Kensington, page 32. Additionally, page 13 mentions inventory buildup as a concern. These points collectively indicate that the company faces challenges related to inventory management, which could lead to supply chain disruptions if left unaddressed. That concludes the financial summary for COEUR Mining Inc. Feel free to comment below, and I will be happy to answer them when possible.